Good morning. Welcome back to a new week. It's Monday, April 13th, 2015, and earnings season kicking off, and mostly financials this week. Thought I'd do a quick video just sorting through some of the massive list of stocks and just digging into stocks that have decent volume. One of the things that I make sure that I do is we want to be prudent with liquidity. We don't necessarily want to be pointing out stocks that don't have decent way to manage risk in them. Now, again, obviously risk is relative to your trading skills, your trading account, and your goals. But we want to keep it to where we can speak to enough people that if we mention something that we feel comfortable with the risk. So you can see here, we're sorting out stocks this week with at least 1 million shares traded per day on average, and you can see that's only 46 stocks that pull up into that list right now. So what we're going to do is we're going to go to the charts just to get an idea of what they look like, and a brief look before. It looks like there's a few financial stocks that are in really good positions for breakout. It's going to be interesting to see if these levels, we've been talking about this 195 level in Goldman Sachs for a while. Let's see, Honeywell, very solid. If we actually drew that out, that's a nice ascending wedge right there. Moving down, we're seeing a lot of this where stocks that are in downtrends are actually bouncing and looking to fill a gap. Be very careful or have a solid game plan for stocks in downtrends that are bouncing on good volume. That could be the start of a good move in the opposite direction, but it's still a short sale. And even if it's not a short sale in your game plan, meaning you don't like to short sell, it doesn't make it a good buy. That's very important. You have a gap fill here, clearly a solid move down in Schlumberger. Let it become an uptrend, or at the very least, let it at least cross some significant reference point on volume, and right now it's not doing that yet. So definitely keep on the watch list, but not a long yet. Let's see. Seeing quite a few of those. JP Morgan looks very similar to the Goldman Sachs chart. Goldman Sachs has been, this 195 level has been the level for a while, and if we actually zoom out on a longer term chart, it's a pretty major resistance, this 195. So I would have alarms in 195. I probably wouldn't trade the first breakout. I'd like to see it get through that level first because of how many times it's hit this level. However, the longer it stays above that level, if it does get above there, the more I'd like it long. Moving on down, as we said, JP Morgan has a very similar chart. Already seeing a breakout there. Citigroup, very long-term pennant. We've covered how to trade a pennant quite a bit, and essentially a pennant is a breakout trade. It's a wider volatility move into a consolidation. Consolidations lead to an expansion of volatility again, so you can see that we're consolidating there, probably waiting for earnings. If I had a choice, I'd be looking at Goldman Sachs and JP Morgan sooner than Citigroup. They have much more clean, significant reference points, and they also have an uptrend. There's zero trend. If we're in the mentoring room together and we're looking at this stock right now, and if you asked me what I thought about Citigroup, well, obviously over this pattern here, it's a pennant, but just look where you are over the last almost year. You're in the middle of the trading range. There is literally nothing going on in that stock right now. Earnings could change that later in the week. We'll see what happens. Moving on. KMI actually has earnings today on Monday. Blackstone actually breaking out on Friday. Decent volume as well. GE, I would not be looking at that stock to be a buyer today. Unbelievable Thursday and Friday. Absolutely let it settle in today. So out of everything I've seen so far, it looks like JP Morgan and Goldman Sachs would be at the top of my list with earnings later in the week. KMI today. Citigroup, not at the top of that list. So that's a general overview of the stocks that have at least 1 million shares traded this week with earnings the week of April 13th. Do your due diligence on your stocks, when they're reporting, pre-market, after-market, what day they're reporting. I just want to end it with something that's very important. Trading news which obviously an earnings announcement is massively different from trading just a technical pattern. Make sure that you can handle the volatility. Make sure you can handle the risk commensurate with actually trading an announcement. If it's not something that you're comfortable with, or you don't feel 100% conviction that you're in control of the trade, and when I say control of the trade, I'm talking that you actually believe you have an edge trading the announcement, it's perfectly okay to let it settle in. Because more often than not, what will happen is it'll go up, it'll go down, do whatever it's going to do, and then it will eventually pick a direction for the next 3 months until the next announcement. As a trader, you want to have an edge that you can rely on, and if trading news is not your bag, and especially if it's literally not a part of your trading plan, there's nothing wrong with letting it pick a direction based on the earnings. Let the big money push it in a direction and trade it in that direction for the next quarter. It's not something everybody needs to do. There's really no other way to put it. If it's something you have the knowledge to do, if it's something you have the skill to do, jump in. But my job, my responsibility is to help you get to the point where you recognize what your niche is and then really master that niche. And it's very, very difficult to trade everything. And trading earnings versus trading the charts, not the same thing. So really think about whether or not it's something that you want to attack. Have a great day.